The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And I'd like to remind you folks that try to take advantage of the Tiger Dollar promotion that's going on now. You can find it on the banner on the website for TFNN. It's a terrific deal, and you're also giving money to charity. That's pretty much of a no-brainer, and the educational value that you get is terrific. And frankly, you know, if you really have an interest in technical analysis, you should attend Basil's two-day webinar. I mean, to get somebody at his level for 2 days at that price is just it's minuscule in my opinion. That is so cheap, it's just unbelievable. But that's what Tom does. He makes things of great value. So, you know, Basil really knows the stuff. So if you get a chance, I would suggest you use some of your Tiger dollars for that. Okay, we've got a situation going that we've been talking about for a long time. Actually, for the last 13 or 14 days, we bottomed down there on the solar eclipse. We've rallied. That was on around the 13th. We bottomed on the 16th, and we're rallying up today into the lunar eclipse and full moon, which happened on the 28th. This is the 2nd of December, and therein lies the problem, folks. We are at the same price as we were last Thursday on the show. And that's at 14.15, 14.16 in the S&P. We made a high of around 14.24 and a quarter or something like that in the early morning. You know, for some type of a, you know, somebody said something on the news. But if we get above 14.25 today, I think my analysis of you know, the market coming down after this cycle high that I'm potentially looking at is going to be really, really suspect. So I would exit positions if we get above 14.25 today in the S&P futures. That's the easiest way to look at it. And we will find out whether it's going to be right. We don't have to wait any longer than this. You know, it's really got to work, or it's that accurate, because if it doesn't work, you know, it's just not going to work, and that's just one of those patterns that happens. I found something that someone asked me to take a look at, and I'll share it with you a little bit later, about another one of the markets that is in the news quite a bit, and that is China. But I'll go into that just a little bit later. But what I wanted to do now is just walk through, you know, some of the things that we're seeing in the stock market, because, you know, we're at these same patterns before. I posted in to Tiger TV the NASDAQ, and it shows that we bottomed around the 786 on the new moon, and we've been coming up straight up into the full moon. And we've made a slightly higher high than Friday. Today we're right at the 50% level on the move, and it's also in an area that, you know, everything's lined up. That doesn't mean that it's going to work. And when these things fail, remember, they fail very, very badly, and that's the thing that you really don't want to, you know, stand in front of. But one of the reasons for my bearishness, you know, as most of you know, is the divergence that we've had in the Dow Jones transportations, you know, versus the Dow Jones Industrial Average. And if you go into Tiger TV, you'll see the really nice patterns that are there, and you'll see the long-term downtrend line for the whole year from 2012, starting in early March. This market has been in a downtrend. We've had lower highs and lower lows all the time, where the market was making, you know, moves to the upside. Now, if this thing breaks up to the upside, that could be the thing that, you know, propels the market to go a lot higher. But until that happens, you have to say this market is still in a downtrend. I mean, every top has been lower, and the bottoms have been lower. That's the definition of a downtrend, no matter what time frame you pick. So the Dow Jones transportations are certainly not confirming, you know, this particular move at all. And I think it's important that, you know, we look at that. And then also we are also going to take a look at the Russell 2000, because it also has made a 61% retracement. It's trading right there right now. And, you know, just like the S&P is and just like the Dow is, the time is right. This is the last day, in my opinion. These lunar cycles are not any farther off than where we are right now. On the lunar eclipse that we have, the solar eclipse, we had it on the 13th. The market didn't bottom until the 16th. So you had 13th, 14th, 15th, 16th. That's 4 days. We had the lunar eclipse on the 28th. You had the 28th, 29th, 30th. First, second, today's the third, and this is the 5th day. So, this is the last day. And since we were, basically closed Sunday, this is the last day. It either works right now or it doesn't work. So if you bought the SDS options, you're losing about half of your premium, and I would take those off if the S&P futures get above 1425. Now the SDS did make a slightly lower low than we did on Friday by just a little bit, but it hasn't gone anywhere. The stock is about $1.40 from where we recommended buying it, and I would put a stop 50 cents lower than today's low to protect yourself if in fact this does not work, because you don't want to stand in front of this thing if it fails. Now the next chart that I wanted to put in is the third segment of the Dow Jones complex that Richard Russell discusses in his letter, and that's the Dow Jones Utilities. And that also has been in a very substantial bear market, very, very bearish since October. We went down below the April lows, whereas we haven't even approached those in the June lows for any of the other markets. And now the Dow Jones Utilities, since the solar eclipse and new moon of the 13th of November, has only rallied into the 382. Today's high was an exact 382. Whether that means anything or not, I don't know, because the market's got to turn down today, in my opinion. I use time, based on these lunar cycles, and it's pretty accurate. And believe me, we're at the cliff's edge. You talk about a fiscal cliff at Washington. This is the fiscal cliff of technical analysis, because if this thing don't turn down today, it could really just take off and, go to no man's land, and, you don't want to stand in front of it, because it'll give you several chances to do it. But we were up quite a few days in a row. We're overbought under any stretch of the imagination. The news that comes out really doesn't mean very much at all, folks. It really doesn't. But the thing is the time is here, the time is now, and if it doesn't go up, we have to take a bow and move out, because I don't want to stand there and beat a dead horse, especially if you're trying to ride it. It just doesn't work that well. That's just no way that you can possibly make things work when these things do not work the way you want them to. Now I want to bring a little bit more of what Basil said about the VIX index, because it also is showing a very nice cycle bottom of around it's a 37-day cycle from bottom to bottom that started, last June, and then we had another bottom in August, and we have another bottom in October, and one that's due right now. It was actually due on the 1st of December, and we were closed that day, so here we are on the 3rd of December, and if this is good, the market should be, ready to start to sell off, and the VIX should start to move up. I know, people say, well, why are you, so adamant about this day? Well, I looked at the time, I looked at the price. To me, it looked like Wednesday or Thursday was the time to do it, and because we were so close to the eclipse at that time, which was on the 28th. Unfortunately, the market, edged a tiny bit higher each day, a little bit higher on Thursday, a little bit higher on Friday, and again, a little bit higher on Monday, and that's part of the way the market, fools you. Bernard Baruch once said in his book, My Own Story, he said that the market exists to drive people crazy, and I believe that statement. I mean, because I've been involved with it, quite a few times, as far as trying to fight it. And you don't want to fight the market. It's better to to take your punches, get out of the ring, and do something that it's a whole lot easier to look at. We've got one other market that is at very, very critical levels here, folks. We're setting right on it if you wanted to, and it's in several markets because we've talked about these before, and that is the U.S. dollar market. The U.S. dollar index We've been talking about this correction coming down here to the 61% retracement level at the 79.73. Today's low has been 79.72. So, we're right at the time where this is at the 61% retracement. That corresponds to the euro at the 131 level, which we hit that briefly, I believe, this morning. And so we're trading a little bit below that right now. So that's also at a very, very, important spot. Because remember, this stuff is really moving very, very dramatically in the markets, Forex, because that's where the cash is moving. The markets that we trade, the E-mini S&P and the NASDAQ and the other stuff, that's funny money because they're dealing with, contracts and stuff like that. But with Forex, they're actually dealing with real money and real products. I know they have a lot of leverage, but there's a lot of difference in the Forex banks that are out there. In fact, there's something going on now that I think you should be aware of, and the fact that there are several Forex banks that are scaling back their operations, and they're not going to be focusing on the retail customer. And I'm not sure why that is, because in the past that has been their bread and butter. But for some reason, I don't know if it's because of regulations with the Dodd-Frank bill or whatever it is, but there are some of these are coming back and cutting back, their operations for the smaller investor. They're focusing on, the larger investor. So make sure that you want to, keep informed of what your, Forex bank that you deal with, that they are going to be, taking care of your account, because you don't want to get into a situation like they had with MF Global and also, PFG Best. Either the PFG Best one has pretty much been resolved. The people got about 30 cents on the dollar. The MF Global people, some of them have got 70 cents on the dollar. Others have not got anything. So, they've still done quite a bit, for the same thing. Someone asked the question, what does this mean for the CME futures? It doesn't mean anything, because the CME is a commodity exchange, folks. That's in Chicago, right there on Wacker Boulevard. It's been around for 180 years or something like that. The only bad thing they ever did this year was just not make the accounts good for MF Global, because the exchange should have been the person of last resort, but they didn't stand up to it. And not only that, but we have the CFTC and the SEC now talking about merging. Boy, if that's not going to be a marriage made in hell, I've never heard of one. Because, well, I guess it's part of the gay marriage thing that they have going on in Washington, that they've approved gay marriages. Well, why not? They'd have a really good one with the SEC and the CFTC. You have two monumental screw-up organizations working together. Boy, that's really going to turn out well. I can't wait to see the frauds that come in on this particular one. If they let Madoff get by and Corzine get by and Russell Wassendorf get by and many of the others, God only knows what's going to happen, to the rest of them. So I don't know what's going to happen, but if they do merge the CFTC and the...
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, folks, I'm going to take this short segment here to talk a little bit about the international markets. I posted a chart into Tiger TV from my good friend and student from New Zealand, Graham, and he kind enough to send the one for the DAX and the FTSE, and I just wanted to put these in here to let you know that, you know, we did have this big butterfly pattern form, you know, way back in July, and now what we've done is we've come down and we've rallied back to the 786 of this particular move coming in right now. It's where we are in the DAX, and the FTSE is exactly the same thing. Now, these markets, they're either going to fail right here or they're going to take off and break out to the upside. So this is something that we have to keep in mind. We've got a caller from Jim in Palm Harbor. Are you there, Jim?
Yes, I am, Larry.
How are you today?
There? I'm doing
It's good. Everything's fine.
I had a short position on E-minis over the weekend, and I had to leave early this morning, so I put a stop for half my position at 1421.50. I figured if it was 1419, they'll run it to an even number, but they did catch the stop.
Yes.
I want to add to another position back on a downside, and where would you enter that position right now?
Well, if you want to get back in and you want to, you know, do a rally, you can rally back to the 61% retracement, you know, up to 1419, and then you could stop at above 1425. That would be the easiest thing to do. Now, if you wanted to, I'm going to put just a 15-minute chart into the Tiger Den, and you'll get an idea of what I'm looking at. But I frankly, you know, if you want to be really safe, Jim, is to wait till the close. And if you close badly, you know, just get in short somewhere around there would be my guess. Your other choice is that you can sell it on a rally back if we get to 14.19 today, and that wouldn't facilitate you risking very much, because today's low is really the 786 of the low we made last Friday. We have 3 higher bottoms in there, one from the 29th, one from the 30th, and then the one today. All 3 of those bottoms have been higher, and so that tells us that, Larry is still wrong. This thing is still, wanted to go higher. I'll put that into Tiger TV so you folks can take a look at it, but that's what's happened. We've had 3 higher bottoms. All of them stopped exactly at the 786, and we need to get below 1410. If we get below 1410, which would be below Friday's low, that would be an outside day, and that's very important for candlestick people, because that's the engulfing line. And so 1410 would be the area that I would be looking at. I know we're only 6 points away from that, but these markets move very fast. But 1410 would be the thing that I would be watching to say, well, maybe it's got a chance to go down here. But frankly, time is running out. I'm looking at the clock on the wall here, and each time the second hand goes by, it says, Larry's wrong, Larry's wrong, Larry's wrong. So you be real careful in here.
Okay. And then when you have a chance later, could you look at the NYA?
Sure. The New York Stock Exchange Index, yes. I always do that one. In fact, I'll do that one if you're on the. This is a short segment, so stay with me, Jim. You're a good friend and a frequent caller, and you don't throw any fruit or vegetables at me, and I certainly appreciate that part. But here again, we are setting right at the 61% retracement. In fact, we're just a tiny bit below it right now as we speak. My chart's going to be. Well, I've got to take off these little notations here, and we want to.
Right now, it seems like I've lost the feel for the market, and I would have had my stop hit, but I would have added a short on a break of 1420, but I wasn't around until.
Well, that's the problem. See, you're sleeping instead of being in the markets 24 hours a day. See, you got to stop doing that. No, the New York Stock Exchange Index, the 618 retracement from the high we made back in September came in at 82.66, and we're trading at 82.64 right now. So all of them have come together. I mean, this is why I'm saying today's the last day. I've looked at the price. The time is there. I mean, it's either going to turn down today, or this timing thing for the lunar thing is wrong. And it's just not going to work this time. There's one other possibility, Jim, that could have happened, and that is that the bottom made that sharp bottom on the 28th of November when we had the lunar eclipse, and that could have been a bottom. Even though the market only reacted one day, maybe that was a bottom. I really don't know, because all the others have been tops and bottoms. Maybe that was just a rare bottom of some kind. That's why I'm saying you can't stand in front of this thing if it takes off today. It just can't. We got to take a little break here. Can you stay with us, and we'll discuss this just a bit more?
Yes, I will.
Okay.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. Jim, are you still there?
Yes, I am, Larry.
Okay, let's talk about that S&P. You know, if we do get the rally back to, say, 14, we're trading at 14.16 right now, roughly. If we get a rally back to 14.19, given the fact that this should be, the high day at the very latest. I mean, the high day should have been actually Wednesday. We have Thursday, Friday. Today's Monday. It's the third day. This is the last day. You don't want that thing to get above 14.24 if you sell at 14.19. So that's a $250 risk, which is certainly acceptable.
That's actually one of my questions was to ask you about where you would put a stop. And
yeah, that's exactly what I would do. And I would do it because of the time involved here. If we were in a situation where we weren't up, we're up like basically since the 16th, so we're up roughly. We're up 11 trading days now, and that in itself is an outlier event that makes the market extremely overbought. So, but that doesn't mean it can't go 18 or 20 days. I mean, occasionally, they go crazy, and this is what you have to be afraid of. So, at the 14.19 level, your stop would be 14.25. That's 6 points, 5 or 6 points, and that's certainly acceptable on a contract that is worth $70,000.
Okay. Last question: are there any astro dates coming up in the month of December that? If this one failed?
Yes, there are. We're over one today. It's a smaller one. The other ones I haven't really looked at because I'm just looking to see how it handles today. Because if we don't close down today, then I've got to get back and to see what what I don't think I did anything wrong. I just think this was a failure. These don't always work like I want them to. So I'll just go back and try to, review that there might be something bigger to be pulled out there. But we have a very large Jupiter cycle today, but that has a very wide orb of 5 days. It could have been 5 days before, 5 days after, so you can't really say that it's going to hit on today. The main thing was the lunar cycle, because the lunar cycle was set up exactly like it was 25 years ago, and it still could work. I mean, we just because we made a slightly higher high today, didn't really mean very much. It was in the middle of the night, really, and very early in the morning New York time. And, so you still don't know that it hasn't worked. We have to, if we get below 1410 today, then that's a small sigh of relief. But like I say, a very small sigh of relief.
Okay. Well, we'll watch the close this afternoon. Thanks for your time.
Yes, I haven't reverted to the hope and pray method yet, but I still have it on my desk here. Thanks for calling in, and a happy holidays to you and your family, Jim.
You too. Have a great day.
You bet. Okay, folks, now I want to bring to your attention something that's happening in one of the international markets that's getting some, quite a bit of attention, and that's China. And we have a pattern that is happening in China that I think is worthy of our attention. And for some reason, I am not able to. Oh dear! What have I done? That's what happens when you give a. Oh, dear. I'm going to have to close out something and then go back in it again. Otherwise, I will be in bigger trouble than I had hoped. Okay, that's not it. Okay, let me see here. Well, I'm getting off base here a little bit, so I better change it until the break and then see if I can find it. But I had a very, very nice chart for China that I wanted to look at. Here I did. I found it. Just give me a second here. It only takes me a little bit of time to do this. Okay. Now I'm going to post into Tiger TV the Chinese market going back for the past year, because we have a butterfly pattern forming. The Chinese market's been going down very strong since 07. And so we're in a 6-year bear market, and we're coming down. Actually, the low was in 09. I beg your pardon. And what we're happening now is we have a butterfly pattern happening in the Chinese stock market. This is the Shanghai Composite, which is the bigger one of the Chinese markets. That comes in at 1950, and I believe it's trading at around 1975 right now. So we're very, very close. That 1950 level is also the 786 coming off of the 2009 low. And then we rallied up for about a year and a half, and we've been, down for the last 3 years, in the Chinese market. And we're retesting the 786 that comes in at 1950. And then also the butterfly pattern over the last 2 months comes in at 1950. You'll see that if you go into Tiger TV. It's in red. And then I've put in the cycles from, these are 55-day cycles that come in, and Steve Rhodes does a great deal of super work on astrology, and that 55-day cycle is related to the Moon and Pluto, and that cycle is really accurate, folks. The 55-day cycle in the stock market is accurate anyway, but it happens to be the Moon-Pluto conjunction. In other words, when the Moon and Pluto are together, that would be equivalent to a new moon is a conjunction. An opposition would be a full moon. But when you have Pluto and the moon at 0 degrees, that's equivalent to like a new moon, and that's a 55-day cycle. Okay, we've got a call from our friend in Philadelphia. John, are you there?
Hey, Larry. Good morning to you, sir.
Good morning to you, and a happy holidays to you and your family. What can I do for you, my friend?
Say, Larry, would you just pull up and give us a quick update on gold, and then I've got a follow-up for you, please.
Sure. Which time frame are you looking for, John, on the gold?
I'm just thinking. I'd like to know what you think, looking at that daily chart.
The daily chart, I certainly will, and I'm going to put the relationship of the silver along with it, because we have the silver, making a situation where silver has actually been stronger than gold, by quite a bit lately, and if we can get silver above $35 an ounce, John. I know you've been bullish on this stuff for quite some time. to me that's going to be a send-off, because if gold can get above $17.55, we're $28 away from there. That will break out of the 61% retracement. But the thing that has my interest is the fact that, silver is actually, for the first time in a very long time, well over a year and a half, is actually, acting a little better on a daily basis than the gold is.
Hey, can I, speaking of silver, I wanted to ask, you were trading markets back in the 70s, so I wanted to ask if I can draw on that historical experience of yours. When we look at the silver chart, Larry, on that monthly, of course, you have the 1980 peak at that $48-49. And over the years, I've heard you speak of the idea that, frankly, maybe that $48-49 was a little bit suspect, but, you were clearly up to $40-45. Well, you've got that in 1980, and then here in 2011, in that April time frame, you had that $48-49. And I've heard over the years, good, dyed-in-the-will, street-smart traders speak of the significance of markets and consolidations and double tops. And if double tops are exceeded, blast-off type of events can occur. My question to you would be, does that sort of idea apply here in silver? And if silver surpasses 48 to 50 in the next year or two, does that signify things to you?
Yes, I really do believe. And, double tops and double bottoms are two of the more sophisticated and more accurate of all the patterns that, Andrew Lowe looked at when he wrote his book on the evolution of technical analysis, and the fact that the markets were not random. It was one of the primary patterns that he looked at because it is so well. Now, in 1980, believe me, John, I was there from early in the morning till when the markets closed at noon every day in California, and I watched every tick. The reason why is I was hedging and doing speculative trading for the firm, and then I was also doing hedging for some coin dealers that had very, very large inventories. And so, once the price got to a certain level, they would lock in a price. And once silver went above $45 an ounce in January of 1980, this was about the middle of January, it was going limit up every day, there was very little trading between $45 an ounce and between what was the ultimate high that I saw as a print, which was $54 an ounce. Some charts don't even show that. And I know it was there because I was literally watching it trade, even though there was very little volume up there. It was actually trading volume. The bags themselves, the 90% silver bags, pre-64 coins, never really traded above $40,000 a bag. In other words, for a $1,000 face value, they never really traded above that. I got out of my bags at $31,000. I had several bags, and at that time that paid for more than 1 year of a college education. So and I was in that stuff at face value. So it was a really good deal, for us. So, but you're right. If it is, and the good part about this is, we've talked about it before, when we had that high in April, it was screaming to get out. There was no liquidity. There was open interest dropping like a rock. We're trying to warn everybody, and then it dropped, $22 an ounce without any trouble. But the good part is it didn't go down very much. It went down, roughly 50% of the low from 09. It hit it exactly. And since that time, it's held up extremely well, and we've talked about the triple bottom in it before. And as a matter of fact, you've done a lot of buying at those triple bottoms because I've watched your trades that you put in the Tiger Den that have been absolutely, spot on. So, this is where you really, see how these things work.
Well, we'll just sit tight and wait, like Jesse Livermore always said. Hey, one last question, Larry. Are you at liberty to share with us listeners any more current thoughts from Bill Foster out of Colorado?
No, but what I'm going to do is I'm going to try to have Bill on one more time before the holidays. He lives in Las Vegas, and of course he is he's an intelligent risk speculator. He's not a gambler. A gambler, works on an event to occur, but Bill is very, very. He's a very informed astrologer, and he bets on sporting events based on the astrological, the things that he sees in those charts, and believe me, he does a great job. That's why he lives there. And so I'm going to try to have him back on again. As a matter of fact, I was really shocked that he even came on the show, and I hadn't talked to him in well over a couple years, even though we used to talk a lot about it. But he's a very long-term, when he does stock market and commodity market stuff, he does longer-term things. But I would like to have him on because, I'm interested in the play that he was talking about, mainly because I really want to sell these bonds and I really want to sell these stocks. But, this is it for me. If they don't turn down today, I'll look for another spot, to look at it, because I'm not going to stand, just not going to stand in front of it.
Sounds like a wise move to me. Larry, thanks so much for your help. I appreciate it.
You bet, John. And happy holidays to you and your family.
You as well.
And I hope you keep the weather nice in Philadelphia for our family there. I don't want to have any of those big swings. Okay, we've got a call from Brian in Jackson, Mississippi. Hey, that's one of my favorite places. Do you know Rick Redmont by any chance?
No, I sure don't.
He's one of the biggest speculators in the South. You should meet him if you ever get a chance. He lives on a big cotton plantation down there. What can I do for you, Brian?
Yes, sir. I'm looking at the S&P 500 and the spider chart, the same one, but I'm looking at it, and I'm going back to March, and I'm coming over to where we're at now. It looks like it might be forming a head and shoulders pattern, looking at that.
Yes, I don't think there's any question of that. As a matter of fact, it is not what we'd like to have as a real symmetrical one, but I will show you the. Let me try to put the Thanksgiving rally in here so that we can see it together. But you're right, that would be the problem with it is the symmetry of it is not what you'd really like to see, Brian. That's the problem. You'd like to see the symmetry to make the right shoulder a little clearer. Right. We've got a really nice left shoulder and everything, but we don't have a really nice right shoulder. I'm going to put it into Tiger TV because what's interesting today is the exact high in that S&P cash, which is the actual market at the S&P 500 where they do the calculation, and right. That's what they use for the OEX. That exact high was exactly 61% retracement. It came in at the 288 level, and the number was 143.01. So it was within 12 cents of being the exact 618 retracement. So that's what I'm looking at.
Well, going back to September and October, that wouldn't qualify as a double top there, would it, or a triple top?
No, it's not a double top. The reason why is a double top has got to be within 92%, is what Andrew Lowe said in his book, the Non-Random Walk Down Wall Street. They quantified it that above 90%, actually. If it's above, within 90% of the high or goes just slightly above it, then it's a double top. But it can't go more than 1% above it, and it can't get much below 90% below it. Otherwise, it's just going to be retracement top. It's got to be very, very close.
Well, I'm short now on the spiders, SPYs, and I think I'm going to keep it and kind of take your advice, the mother's advice. And
if it closes good today, throw some fruit at my picture or something, and we'll look at something else down the road. But you really got to get it to start working today. Time's going to be up. I'm going to take a little break here, my friend. Listen, thanks for calling in, and happy holidays to you, and may God bless.
Thank you.
You bet, Brian. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I think what I'd like to do is sort of end the show with a couple of things about the currencies, because that's what moves the markets. I want to put the Japanese yen versus the U.S. dollar versus the Japanese yen in, because if we get that Japanese yen down to that 81.50 level, I think it's worthy of a buy. We've had several moves off the bottom here. Remember, Tom O'Brien was really bullish this thing way back at 72, and then around 75, we made our first Gartley pattern. And then we made another one at 77. We've been following this. Then we've had this big breakout to the upside that stopped right at the 786 to the tick. But the thing is, it's doing exactly what it did during the November time period. It's only backing off very, very slightly. And I think this could be the real sleeper in the foreign currencies. I've been saying this for a long time. I'm very bullish this. I'm waiting to see a breakout above 83. And I think after that, it's going to be heading towards 87. The thing that you must remember on this particular chart that we're looking at is this thing actually goes back at one time, and I'm just going back to 1998. And the high was made in 89 at 60, but in 1998, this was trading at the 146 level, and here we're at 82. So we're just off the bottom. I mean, this is just beginning, and I think this is one that could be a really a real sleeper. We've been bullish this for quite some time, and I think this is a place that if we do get this pullback to the 81.50 level in the Japanese yen, that it's worthy of a buy. You don't have to risk more than about 50 pips at that point. That's really all you have to risk. Looking at that particular forex pair, and it trades very, very well. And then I also want to talk one more time about the U.S. dollar index, because if the market does take off from here, it's going to be doing it on cheaper dollars, and that means that the U.S. dollar index is going to break 79.50. We're at 79.85 right now, just a little above the 61% retracement. That will also mean that the euro will most probably break out above 131 to the upside. I don't think it's going to do that, but it certainly could, and that's what you have to prepare yourself. In fact, if these things, do turn around, and that would also probably mean that the bonds are going to, start going down in price, higher interest rates, which would be a rather large surprise, because we thought there'd be one more flight to quality run, and that's what I'm still looking at in the bonds. I believe that we still have that possibility in Treasury bonds to have a one more jab to the upside. We've held pretty good support here, considering the fact, where these bonds have been over the past few weeks. They've really gone nowhere, given the fact that, we talk about a fiscal cliff, and that the fact that the world is coming to the end. But, the bonds today, all they did was make a 61% retracement. They actually made a little Gartley pattern off the last low, and it was held exactly at the 61% retracement today at the 149 level. Okay, now this is it. We got the someone mentioned about the Mayan calendar, folks, and the good part about this is don't mail your Christmas cards until later, okay, after the 22nd of December, because if they don't arrive, it won't make any difference. Listen, live every day in an attitude of gratitude, and may God bless.